If you're completely new to trading, you've probably heard the word patterns thrown around a lot. I spend months losing money because of what no one bothers to explain to beginners. Today I'm going to share what patterns really are, and more importantly, how to actually use them without getting burned. Let's start from the very beginning. What is a pattern? A pattern is just a shape or formation on the chart. And most of the time, when it shows up, price moves in a certain way after it forms. Why does it work? Because in trading, like in life, history tends to repeat itself. If price behaved a certain way before in this setup, it'll probably do the same again. But here's the catch. Patterns alone don't make you money. A pattern is not a full strategy. It's just one part. You need to combine it with other things: trend direction, levels, volume, candle behavior. This is where a lot of beginners go wrong. They see a pattern, hit buy or sell, and lose. It's not the pattern that wins trades, it's how you use it. Every tool in trading has its role. Some are better for trending markets, others are for reversals. Some work well on levels, others are for breakouts. Patterns are no different. All patterns fall into two big categories. Continuation patterns, price is likely to keep moving in the same direction. Reversal patterns, price might flip and go the opposite way. You don't need to learn 100 different patterns. Most of them are just versions of these core ones. Master these, and you'll be ahead of most traders. Let's break down continuation patterns. Triangles are one of the best examples out there. They work because of how volatility changes in the market. Markets move in cycles. Low volatility, high volatility, back to low, and repeat. In triangles, we're watching for a squeeze. Price keeps bouncing between support and resistance, but the range gets tighter and tighter. That means volatility is about to shift. If we have a strong trend in place, that's your green light. The pattern ends with a breakout, usually in the direction of the trend. So here's how you trade it. Spot the triangle. Make sure there's a strong trend and plan your entry and expiration. That's it. Simple structure, clean logic, and when used right, very effective. Here's one thing you gotta remember. Never enter a trade until the level is clearly broken. Why? Because price might fake out, bounce the other way, and mess up your setup. If that happens, you wait. Let price drop to the next support, and only then, open your trade with the trend. We don't trade against the trend. Now the big question, how long should your trade be? It's simple. Count how many candles fit between the resistance level and the trend line. And that's your expiration time. Let me show you this chart I found. Good payout, mid-level volatility, perfect conditions. First thing I noticed, a fresh resistance level, and it's setting up for a possible triangle pattern. I'm zooming out to the 5-minute time frame. Global trend is up. Perfect. That means we can trade this setup in the trend's direction. Here's the plan. The green box at the top, that's resistance. The green line under it, that's our trend line. If price squeezes into the triangle and breaks resistance, I'm going long. If it breaks the trend line, I'm still trading with the trend, but only after it hits the next support. Let's draw it all out on the chart real quick. Now look, price starts to dip and break the trend line. And I know some of you would want to jump in right here. Don't. Stick to the plan. If that trendline break had happened closer to the triangle tip, that'd be one thing. But here, it's too early. Looks like a fake out, and I ignore it. Now, why go for 10 minutes on this trade? Because the size of the triangle's first impulse gives us a rough target for the breakout. So 10 minutes should be just enough to ride it out, even if there's a small pullback. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform.
Then you get the signal. Place the trade, and that's it.
Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Reversal setups are totally different game. Here, we actually don't want a strong trend. In fact, flat markets and high volatility help us out. Reversal patterns show you when price tried to continue but failed, and now it wants to turn around. Let's take a classic, the double top. Price forms the first peak, then pulls back to create a neckline, then climbs back up to retest the same level, forming the second peak. If price breaks the neckline after that, it confirms the reversal, but only if the break is clean. Big candle, strong volume, no weak fakeouts. Now, about expiration, this part matters. The expected move after the neckline break is usually the same size as the distance from the peak to the neckline. So if that distance is, say, 5 candles on a 10-minute chart, you're looking at a 50-minute trade. Just like before, find the pattern, make sure the trend is strong, draw your plan, and wait for that neckline to break. And again, don't guess the expiration. Base it on the move potential, or risk getting stopped out too early. Here's a real trade I took. After the double top played out, trend shifted. The move after the neckline break went exactly to resistance, as expected. There, price went flat for a bit, then finally broke out in trend direction. Touched strong support, bounced again, retested, still couldn't break. Then, there it is. Clean breakout with a solid candle. I opened a 20-minute long. Now remember that engulfing pattern I mentioned earlier. Let's add that in. It's one of the candlestick patterns, different from chart patterns like triangles or flags. 3 candles. The last one completely covers the 2 before it. It shows a clear shift in pressure, and you can use it as a confirmation signal. When I started out, I used to think patterns didn't work. But the truth is, I just didn't know how to use them right. They're just one piece of the puzzle. Even when you do everything right, there are no guarantees. The market does what it wants. Your job is to stay calm, trust your strategy, and not force trades. If you're not sure, don't trade. Confidence comes from understanding your setups and testing over and over again. Hope this video gave you something valuable. This is just the first episode in a whole series on trading foundations. So hit subscribe if you don't want to miss the rest. And let me know in the comments what kind of content you want to see next. See you in the next one.